Hi, everyone. Rosie here with Rivet Real Estate. We have Brittany and Roger here today. And what I was referring to is that right before the call, we actually do regroup for a minute and kind of overview on what we are about to say, because we do want to make sure we have a unified view of what we are about to deliver today, because real estate is so vast. And between three of us, we are really casting a big net for our people. So it takes a little strategy session, and the part of the excitement that we bring to the call is, getting before the call, and we have to convince each other. Like Roger has a news that we listened to, and we were like, why is it relevant to talk about it? Like, how does it pertain to real estate? And then Bree has a property that she has identified as a great rental. And we're like, well, why here? Why not here? Why the cash flow? Are you sure the cash flow is this much? And you can probably tell what I do. I'm the why girl. I'm creating a why and questioning why your news, why your property, so that we're handling the objections prior to you, right? So guys, what do you have to say on that? Like, kind of warm up the floor here.
Yeah, no, that's exactly right. So, I mean, it is about getting consensus, but it's not about getting consensus at the same time, because we do got to report what's important to you guys, the good, bad, and the ugly, so that you can make a wise investment decision. And so, but there's plenty of ugly right now, I think, in the economy overall. So it's about finding, I guess, the opportunity that's like in a needle in a haystack. So I think that's why I'm here.
Well, you guys are going to be excited. Bree, what do you have to say to that?
Well, I was just going to say, Roger said, finding needle in a haystack. I think we have a lot of needles right now in the haystack. There's really some good opportunities right now. You don't have to search far and few, right? So I'm excited to share that information. And I'm really excited that we have new information coming to our investment sheet that I think is a game changer. And I think all of our investors are going to truly benefit from this.
Today is going to be our first call where we are leveling up our way of evaluating investments for our people. Roger comes from a commercial world, and our actions are actively involved in helping people buy more than 5 units, 4 units. So there is a new perspective when you go above 2 units, right? You're entering multifamily. So today we're excited to consolidate all of it for you. So Bree, should we let Roger get started with the...
I think so.
Yeah, I think
Roger,
we can go ahead and start. Yeah, let's start with the headlines so we know what's going on. And guys, by the way, I'm going to share the headlines for Austin today, and drop me a line. Okay, comment here or what's the best strategy, guys? Maybe they can email us for the rest of the reports on the other cities, because we have Dallas, Houston, San Antonio as well.
Yeah.
Okay, fantastic. Awesome. Yeah, just request it. We'll make sure to make it available to you. So NXP Semiconductors already has such a huge footprint in Austin. They want to expand. They want to make more chips. $291 million project. If they maintain a certain level of employment, they are entitled to this tax refund. So that's what everything is hinging upon. And the city council will meet and approve. I guess I'm thinking they're going to approve it, because obviously they want the $291 million to come into our local economy. And some more good news. The Austin Convention Center is looking to break ground on a $1.6 billion redevelopment of the existing convention center, which is really exciting news to me, because we go down there for South by Southwest, and we get to see a lot of different companies hosting there. For several years, we used to go down there for a real estate convention. And believe it or not, guys, the footprint there is so huge that it's actually one of the most highly desired locations for companies to have their conventions. And on top of that, they get to experience a lot of the Austin nightlife. And so this is really exciting news for me, because...
Wow, this is great. This is
good news.
Roger, can I interrupt for a second?
Yeah,
if
sure.
you would go to your Zoom plus sign on the top, where it's 81%, I want to,
Oh, gotcha. Maybe, okay, a little bit bigger.
yeah, a little bit even
Okay.
more bigger. So as you scroll,
Okay.
we can read better.
Cool,
I
cool.
need
Awesome.
glasses.
Great, great. So, and I always wondered, maybe you guys wondered the same thing. How does anybody get any work done while they're in Austin and having so much fun? That's always been on the back of my mind. Maybe you might have an answer for me. So, really interested
We
in that.
work from home.
Yeah. Okay, cool. And they're also talking about in this report on Austin Business Journal talks about Elon Musk, his company's Boring Company, which is here also. I think they're headquartered now in Bastrop. Tesla Gigafactory, and they talk about the exchange of land that they're doing between each other and utilizing these properties. The companies didn't comment on that, but obviously it's in the tax rolls. Now, my advice to anybody is that if you are looking for growth, I recommend just going a little bit outside of the factories. So start exploring places like Hutto. Don't go dead smack in the backyard. I know Taylor has Samsung. You don't want to wake up to smokestacks or own properties right next door to it. It just sounds good. And I know Taylor's super hyped up right now. But again, there is going to be a lot of economic development there. And I'm not knocking Taylor or Bastrop or, the Tesla Gigafactory, which is like a city of its own. Go on the outskirts or go back into the city, buy real estate there. I think your tenants will appreciate it too in the long run. So right now, don't buy into the hype. Go a little bit on the outskirts. I like Hutto. Take a look at Hutto. And
Yeah, so Roger, real quick, let's talk about this. We saw a lot of industrial parks being built, like industrial building space being built around Highway 130 tollway, right, which goes through middle of New Pflugerville. And when Bree and I are talking about people wanting to buy or invest in Pflugerville seems the hype, because it has the Amazon's million square footage warehouse coming and so many more industrial spaces coming there. But it also kind of increases the land in a way, but the desirability doesn't necessarily goes up at the same level, because there is a fine line between commercializing a city versus creating a lifestyle in a city. When was the last time you said, I want to wake up to an industrial space next to my house? Said no one ever.
Perfect example of that would be, the Pioneer Crossing subdivision in Austin, 78754 zip code.
Yeah.
I'm sure when they broke ground in that, Samsung semiconductor plant, I'm sure it was the big hype of the city. And I think it was back in 98 or something like that. And I'm sure all the property values around there, went up. But Pioneer Crossing, just another neighborhood. It's just maybe a little less desired, right? So they have landfills nearby and those sorts of things. And
can I say something here? A hands-on experience, because 15 years ago, we lived there. We started renting temporarily there before we bought our own residence when we moved into the city. Here is the thing, when I met with people in Pioneer Crossing, not everybody who worked at Samsung was living in Pioneer Crossing. Matter of fact, anytime the housing is right next door to a big industrial space, it is a cheaper housing. And oftentimes, a lot of people who were living there were renters.
I remember going to a listing appointment with you and we stepped into the backyard and you could see Samsung's smokestacks. And this is, I think, 2013 when the market was on a recovery. And that seller was having a hard time. I think he had gone through 2 agents already and he couldn't sell,
Yeah.
I had an opportunity to become a partner of a development a few years back. And I had to tell them that I wasn't interested, and they were quite shocked because who doesn't want to be a part of a development? And I told them that I could see the smokestacks and I wasn't interested. And it was the best decision I ever made. That project never took off. And so it's my advice to you guys, firsthand experience in the field, to take a look at those things and take them seriously.
I just want to throw a little joke up here. If you don't want a project to ever take off, ask Roger.
Yeah. No, there's plenty of
He will
places
tell
to
you,
buy.
I don't want to be a part of something that, it's actually
because
very
being authentic is so important, and being transparent is, you're going to have a business relationship with people, and
Yeah. And
They
people who were
require-
renting in that area right next to Samsung were often working in downtown because it was 10 minutes drive. And so
And
play,
it's still a desirable area, right? So I'm not knocking any of these areas, but I'm saying the exponential growth that we sometimes predict happening maybe takes a little bit longer, or
yeah.
by that time everything else is growing anyways. And
Mhm.
so don't pay, they say you make money on the buy. So don't end up buying it so expensive because of all of this expected growth to happen. Be a little more realistic, unless you're buying commercial property and you're really heavily relying on foot traffic and different things. Now you have a whole all these other metrics to look at. And we're looking at single family residential or duplex, triplex, quadruplex properties. And so these, I believe, we got to look at them a little bit more reasonably.
Bree,
So,
yeah, Bree, go ahead.
whenever we have things like, Samsung and Taylor, or whenever Tesla came, and remember, no one wanted to touch Del Valley with a 10-foot pole, and then property values like skyrocket overnight, right?
Yeah.
It's always like, what Roger was saying is true. You don't necessarily buy into the hype of a certain area just because something is coming. Whereas Austin in general is like relatively small. I mean,
Yeah.
I can get from Georgetown all the way to Kyle in like 30 minutes, 45 minutes if there's traffic, right? It's not like a super huge city. So if you're like Georgetown to Hutto, depending on where you're at, is 15, 20 minutes, people are willing to do a small drive, right? For them to be comfortable, for them to be in an area where they have other things that they can do, or there is a potential for growth, or they can get a little bit more bang for their buck over there, right? So
Yeah.
I think looking at not only the commercial aspects that are coming are very important, but not only utilizing that as the only data point and where to purchase.
Bingo. If it's cash flowing with all the hype, and you do see the appreciation coming, you still got to look at it, even if it's in those zones, right? So I don't want to.
That was exactly my question to Bree. You covered it. I was like, okay, Del Valley area is where the big gigafactory is. How far is Pflugerville from there, and how far is Hutto from there? Right? Like if you're buying, we tell people all the time, and this is the information, guys, the brokers out there might not bring to you when you're going on an appointment with them. Oftentimes people just look at the property for the face value. But if you're not able to read the trends around the neighborhoods, around the cities, you might end up misevaluating the trend, and you're sitting there wondering, why is my property not selling when houses in Hutto are moving in the same price point? This is why when big economy moves into an area, it impacts the desirability and lifestyle of people. And I think Bree, when she's talking about Georgetown to Kyle, let me tell you guys what Georgetown to Kyle really means. Georgetown, up north. Kyle, very much up south, down south, almost touching San Antonio. In 45 minutes, like with a little bit of a traffic, not bad. Like you're covering the north to south of the city within 45 minutes. That's what we mean by Austin is pretty drivable city.
Great, moving along. The great migration pattern, right? This is something that you guys are probably going to hear on the news and have seen this already. But Texas enjoyed a net migration of 174,000 people. And we did have people move out, with the largest of that chunk going to California.
People didn't like the Texas heat.
Yeah, I think that's what it was. Also Florida.
Let's talk about this real quick. Now, a lot of people are like, oh my gosh, these California people are not going to be living here anymore. What's going to happen? Good news. These are the exact people who are bringing truckloads of cash to buy properties and had hyped up the prices of the real estate here, because real estate is supply and demand. Okay. I love my California people. No hate here, all love. All I'm trying to say is that if they're moving back, you now have more inventory into the market. The same factor that was hyping up the price, the same factor in reverse is now stabilizing the prices. So this is your time to move in. So rather than overbidding and competing with another cash.
Yeah, I think Bree was sharing a neighborhood which was like last year a home would have sold for 450, and this year it was for like I think 325. Such a huge price adjustment, and so that's reflecting in this.
Yep, byproduct.
So the startups, there's 35 startups that were mentioned in Austin Business Journal, and I just wanted to highlight a couple of them. So to start with, there's this Gauge Zero, which is a woman-led startup company, and they secured $300 million and equity backing earlier this year to develop key charging infrastructure for, semi trucks. And so I thought this was pretty incredible because following up on that news, we also have self-driving trucks that will soon have their own lane on Texas 130, which
Bree,
is a really super fast highway.
We used to have bike lanes. Now we have
Now,
self-driving truck lanes.
Truck lanes.
Like Austin and its lanes. I love it. And by the way, guys, 130 tollway is the tollway where Pflugerville is residing, where Hutto is residing, and you can reach all the way to Georgetown. So if you have a major highway improving for this magnificent growth, the cities residing on the outside, inside of that highway is going to experience the growth from it. So here we go. Traffic count.
Yeah, that was really exciting. So Firefly Aerospace, they've secured $300 million in funding. And there's a really neat location north of, well, they have a location in Cedar Park and Leander. And they've also expanded to another top secret location, which we can share with you here. And it wasn't top secret until just now, right? They're like, hey, why aren't you telling them? But reach out to find out where that location is, because I feel like there could be some really great buying opportunities there. Now, guys, before I wrap up the news, because I know you have something really important to share, we're going to share the financial calculators. I did want to briefly just talk about the sales that are going on in our regions. I'll just quickly highlight the top sales in each city. So in Austin, we had our top sale was $6.1 million for an assisted living center. And this asset is really high in demand. And obviously, look, the numbers are much bigger for what's under contract right now. We're talking about $30–40 million, right? But this is November, Thanksgiving time period. And so we're not experiencing the same level of closings. I would love for y'all to stay in tuned, for time to come. And so you can get a really good relation on what's going on, what's moving, and the tens of millions of dollars that are coming into these areas, so that can influence your real estate decision, because enterprise determines appreciation. And now, so that was for Austin, 6.1 million. And then here in Dallas, we had a $3.3 million academy, school academy type building. In Houston, the Conroe area, our highest sale was at $47 million. And this is a 256 unit apartment complex. And for San Antonio, we have Ventura Plaza, which is an office complex, selling for $11.4 million. Now, if you guys want to actually get all the scoop on what's coming, and I mentioned the tens of millions of dollars, and there's properties that sold for 40 million plus. There's large developments like this piece of land that you're looking at down here. And if you want to know where these things are coming in at, we have saved searches for you, and we can update you on all of that great information. So I will send it back to Rosie and Brittany, and you guys take over.
First of all, thank you so much. I mean, who is out there who's telling you where the money is moving in the commercial world? Because guys, when Conroe, Texas and assisted living properties are being bought and sold, it's not because the economy is about to crash. I mean, somebody is able to see an opportunity today and realize now is the time to invest. So if you're seeing the differential in the prices, these are the opportunities. And thank you, Roger, for bringing the confidence, not only in residential world, how in commercial world our real estates are moving and being bought and sold actively every single month.
Yeah.
So,
and I'd love to update y'all with all the different metros, and I know how long that takes. So message us for that news and we'll make it available to you.
And message us for Dallas and Houston if you want data. All right, Bree, take it away.
Okay, let me pull it up. I'm so excited. about this. Okay, so we have made a new adjustment to our calculator where we are showing internal revenue. Now, Rosie, do you want to kind of help everyone understand what internal revenue is?
Yeah, perfect. No problem. Bree, go back to the left corner of the screen. By the way, guys, this is the beautiful work Bree does for hours every single week for literally 10 years in a row, right? Like she sits down and hunts for properties, then a team works together and runs the numbers with her. And this is like handpicked data in each city, what you should be buying, and you're not going to fail on it because the numbers are proven. And this is not what we just woke up and saying, hey, the property will rent for that much. These are actual comps from the market. So just to kind of recap, when you're looking at this sheet, what you're looking at a potential opportunity to invest in a multi-unit, right? When you're buying this property, we are showing you what price you can buy it at, like what is it listed at, okay? Buying is our negotiation later. And then what is the current rent? I mean, if it's already rented, what you're able to see in terms of rental revenue. Then potential rent is what is the current market rent? So there's a difference between what rent you're getting and what is the gross potential rent. So gross potential rent is basically if you were to bring the same unit on the market right now for lease, this is the rent you would be getting. And it's important to look at it because once the leases are exchanging hands or expiring, it is your opportunity as an investor, as a landlord, to increase your rent so you continue to gain the cash flow that you deserve. Okay. Now, last two sections are the cash flow, right? Coming from the commercial world ourselves, right? We have a term that we heavily obsess with. It's called IRR. It's internal rate of return. Okay. Now, when we are looking at a 25% cash flow, right? 25% down payment, what would be your cash flow at 25% down? Right? You're looking at 1684.18. By the way, when Bree has calculated this number for us, she's saying that there is a mortgage payment that includes principal, interest, tax, and insurance. And then there is a rental amount. If you subtract your mortgage from your rental amount, that's your net cash flow. Bree, you with me so far? Am I on spot on that? Okay. Now move to the right, Bree, where you were showing the internal rate of return. So as Bree is showing, right, like if something is listed for 655, like in today's date, you can easily negotiate it down. Bree, let's say 640, just conservatively speaking, you know, if it is sitting on the market for some time. 25% down, like you can do 20% down, you can do 25% down. It's your choice. And our current rates are around 7.5%. Now, monthly payment of $33.56 is your principal and interest. Then she has also added the tax and insurance on top of it. Now, your monthly average rent is $5,700. So if we subtract our monthly payment, tax, and insurance from it, your net monthly cash flow is $15.30.44. Now, the annual rental cash flow basically is if you're getting that per month, what would be annual? We got 12 months in a year. So you multiply it with 12, that's $18,365,000. Not 65,000, $18,365.24. That's just your positive rental cash flow after you pay your mortgage. Now, here is one factor that nobody really talks about, and I don't know why. Okay. When we look at our returns, we cannot wrap our mind around it. But when we look at internal rate of return, we're amazed how good of returns people are getting. Now, if you look at the internal rate of return here, you see it's 22,000. So you probably wonder, what is the $4,043.30? Guys, let's look to the right for a minute before I reveal this big number to you. Bree, is there amortization calculator here too? Right here. There you go. So Bree is showing you here, the moment we change our sales price to 640 and we're putting 20% down, your mortgage at 30-year amortization has a principal and interest payment every single month. But when you have your property rented out, who do you think is paying your principal down every single month? Your tenant. And every single month, your principal payment is going up. Your rent might not be going up every single month, but what's going up every month is the principal pay down. So my question is that when you're not responsible to make your principal payment on your mortgage, a tenant is paying for it. Can we agree that is your profitable gain every single month? Now people are like, well, I cannot touch that money until I cash out. Well, aren't you glad that you're not touching the money at that moment? Because the moment you take this $400 out of your property, Uncle Sam is waiting to chop it off and take his half and leave you with nothing. So isn't it great that you can actually make money and leave it in your property and not get taxed on it until you decide to sell? And even if you decide to sell, we got plenty of solutions like 1031 exchange to protect you from Uncle Sam. Everybody who doesn't know Uncle Sam, it's IRS. Okay. I don't know if they came up with any more cool name. I don't know. Why would you call it Uncle Sam? Like, was somebody's Uncle Sam taking money from everybody? Like, anyways, so Bree, now let's go back to that internal rate of return. You see the dollar signs and a big yellow hand saying error right here. So every single year, not only you're getting your rental cash flow, you're also paying down your principal. So your initial investment, whichever number that you brought to the table, right? Over time, in the very first year, is getting a principal pay down. So it went from 18,365 to 22,408, just like that. And you had nothing to do with raising the rent. Money just got added. But here is where it gets really beautiful. So that's what your internal revenue is, right? Your cash that went into the property and every possible gain that you're getting on your cash, that's your internal return, right? Now, I didn't say internal rate of return, I said internal revenue. Now, if you look at the bottom, we're giving you your 5-year projection on your rental appreciation and your principal pay down. So very first year, a tenant happily paid $4,000 of your principal down. The second year, they paid down $4,330. The next year, $5,074. The next year, $5,468. So within 5 years, they went from paying down almost to $4,000 a year to almost close to $6,000 a year for you. And by year 5, we all know what happens after year 5. Your principal pay down accelerates significantly than the moment it starts up, right? This is the number that people forget to look at. So although your internal, your rental doesn't look like it's making you hundreds of thousands of dollars, but if you combine the two, your internal revenue from year 1 could be just $22,000, right? Exactly where Bree is pointing, 22,000, all the way to $32,000 by year 5. And you had nothing to do with the $6,000, $7,000 you're going to start making every year with the principal pay down. This is the internal revenue that people often forget to look at. And, when we look at real estate in journal.
So you basically, Rose, you've taken your down payment, which was, how much was it again at the top?
Bree, show it real quick.
160, right? And if we add, can you maybe add these cells together, or if you highlight them, does it sum them?
Yes,
so yeah, so you haven't quite doubled your, and I think we're not adding appreciation in there, but if we add appreciation, you've easily doubled your
yes, we haven't even touched your appreciation yet at all. At all.
Yeah. And that's pretty phenomenal.
Yep. So Bree, what was the total? 136. What was that?
Yeah, 136.
136,000. Bree, go back. What was the initial investment again?
160.
160. While you guys are doing this, Bree, you're gonna probably have to help me. When you're done reviewing a couple of properties, I'll calculate an internal rate of return for these properties. I'm gonna need. We'll add a little appreciation on top of it because we all know. You put $260,000 in, you hold a property 5 to 7 years, you don't take $160,000 out. You take your appreciation out with it. So Bree, show us the properties that you have going on and we will run the numbers.
So we have a couple of opportunities for multifamily. So the one that was yielding us, some really nice numbers that we haven't seen in a while, right? Was this property in Austin. It's a 4-plex. Okay. Each unit is 2-bed, 1.5 bath. And they've done, you know, a little bit of remodeling, nothing too crazy, but they're yielding around $1,300 to $1,400 a month rent. So your total rent right now is $5,370, but average rents in the area are about $1,425 is what I was being conservative. I saw $1,475 on there. So you could get a lot more. But when you look at the numbers, you're getting a cash flow of over $1,500 a month.
Wow.
That's insane. Now look, now these are all multifamily units in Austin, and I know the price point's a little bit higher. Let's take it to something a little bit less. Okay. Let's go to Temple area single family. All right.
Yep.
Let's just do that. You say, hey, Brittany, I don't want to spend more than $300,000. I got you. All right. Let's do, okay, Juneberry. Let's just do Skylar Heights. Okay. Let's say we can negotiate it down to 258, 25% down, and let's do a 7.5 rate. Our positive cash flow a month is $97. Okay. But our first year, $2,700 for under $300,000. And look at this. Every year we go from $2,700 to $4,000 in 5 years.
And we're not even calculating our appreciation in here.
No appreciation.
No. And Bree, if you show everybody on the home equity gain graph on the right-hand side, like your $258,000 property, if we considered the normal appreciation in the market, like even if there's a pause, guys, I know everybody, you already are in the dip. People keep talking about the dip. This is the dip.
Oh, yeah.
Right?
That means this is the time to buy.
This is the time to buy. And if you go up, going from 258 to 338 is not something we have not seen. That's being very conservative. So the same $64,000 you're putting in, you're probably going to walk away with another $60,000, $70,000 on top of it when you sell it. So I'm going to do me a favor. Like, Roger, would it be helpful if we show everybody a quick internal rate of return on what the properties would look like if they were a single family or a multifamily? Would you like to do a quick math on that?
Yeah, let's do it.
Okay. So Bree, help me out real quick. I need your help in opening that single family for 655 that you showed very first time with 16 positive cash flow. Yeah.
Wait, you want me to share my screen again?
You can share your screen, or I can share my screen and you can give me the numbers.
Okay.
Okay. So guys, we're about to share our screens again.
You want the multifamily unit?
Yeah, let's do the multifamily unit because I feel like we put $160,000 down in that one, right? And guys, this is what we do in our commercial world on how we calculate our internal rate of return. See, so many people think real estate is an emotional decision. It's great to emotionally fall in love with it because emotion makes you act. But logically, you got to think, is it the right investment for you in long term? Right? And this is what we do in the back end when you guys are falling in love with the properties in the front end. Because 5 years later, we're going to be the one calling you and asking, hey, how's your real estate? Congratulations, you made the money. You didn't see the year one. Let's buy again, right? Okay, so Bree, was it safe to say $160,000 was the negative?
Yeah.
Okay, all right. So in the home appreciation chart, how much money went up? Like it went from 655 to how much?
To 838.
Okay, so can you quickly subtract 838 minus 655?
183,000.
Very good. So 183,000 plus we did $160,000 in investments. So when we would sell that 5th year, right? Let's suppose our properties depreciate now, your rentals go up. Now interest rates might have come down by that time, right? Unless you're really smart with like some of our investors who are about to grab 3.99 interest rate. Hold on to that. We need to talk about that for a minute. So 343,000, right? So Bree, in between all of that, could you share with me what was the cash flow numbers without the principal pay down?
18,365.
Okay.
20,201. 22,221. 24,444. 26,888.
She thinks I can type as fast as
what is it? Okay, 24,444. 26,888.
Guys, if I'm $100, $200 off, please don't sweat over it, okay? It's the same thing. All right. So what I'm implying here is that it's in red because your money went in. It's your whoop out cash. So you whooped out $160,000 out of your bank account and said, I'm going to throw it in this real estate. Every year, you're receiving 18,000, 20,000, 22,000, 24,000, 26,000 in just rental cash flow. We're not doing principal pay down here, okay? Now, if I added principal pay down, it would be a whole different ball game, because what I'm saying here is that your $160,000, when you sold the property and your property appreciated, you guys are walking away with $343,000 cash. Now, if I calculate the internal rate of return, you're looking at a 26% rate of return on your money. Now, Bree, I'm going to make it a little bit more sexier. Show me the number with the principal pay down in it, because the number we included here for the $183,000, that was just appreciation. We're not calculating principal pay down in that, right? Give me the number with principal pay down.
22,408.
Slower this time, okay, please.
I got you.
Okay.
24,531. Oh, the first one?
Yeah.
22,408.
This is why she does the sheets and I don't.
24,531. 27,296. 29,912. 32,781.
Thank you so much. I was able to keep up this time. So this time I'm saying, you know what? The hidden money that you are so sad about that you cannot take out of your house because you can't touch it until you sell it, and you're so sad that Uncle Sam is not able to rob you every single year for taking that money out. Let's just look at what your rate of return becomes now. 29%. And all you did as an investor is simply make a decision. That's it. You can do improvements to the property and cut it all off and put it in the 1031 exchange. You do what you got to do. But this is the return. This is the reason why they say all the time, real estate market outperforms stock market all day long. Because it's a long-term game. I'm not saying take your money out in 5 minutes. Mm-hmm. And I was talking to my father-in-law this Thanksgiving. He's a big numbers guy, and I love picking a bone with him. Did I say the right thing? Picking the bone means kind of like touching your hurts. Yeah. He joggles my brain, and quite frankly, if I can convince him, I can convince anybody. He's very critical in numbers. We have a very love-hate relationship around business. So I hope one day I bring him on the call. And if he's open up enough, I hope he talks the way he does off camera. Okay. So here's what the crazy thing is, okay? I was going over my real estate numbers and he was going over his stock numbers, and everybody knows stock market is not doing well. So he was not a big fan of it right now. And I said, so Dad, what do you think is the difference between the real estate market and the stock market investments? He said, you know what I like about real estate market now, which he was like, my stocks doing well. I was like, well, I don't know anything about stocks. I'm not going to battle you on that. He said, real estate doesn't allow you to make an emotional decision like stock market does. He said in the stock market, you can get emotionally riled up and say, oh my God, I'm losing my money. Let's push that button and sell the stock so I don't lose anymore. In real estate, even if you push that button, that damn button ain't gonna go to the cash register until 90 days later. And you have so many weeks and days and months to rethink it over and calm your nerves and say, you know what? It was just one repair leak in a tenancy, and I think I can eat it up. Like that $500 repair or a $600 fence paint that you did isn't that bad. It's much easier to absorb, and that's an improvement. It sticks to the property, right?
Can I say something? I think we learn by doing. And I remember one of my very first rental properties in my 20s. The fence fell over. It was in a different city, and I made a big issue about it. I ended up selling the house, and now years later, that property is worth several $100,000 more. And I let a little fence stress me out. So
yeah, and I give him heat about that. I give him heat about that every single time and every single chance I get. I said, you know what?
I could
That
have paid a
$1,200
reputable
fence
fence
was
company
not.
to go there and put the fence back up and spend all hundreds of dollars on that. And it would have been perfectly fine in today's date. So
Yeah, and I just want to quickly kind of share with you guys a little story, okay? And I would like to wrap up with that because it's important that being in real estate we get it. So there was this great guy who invented chess from India, and he went to the king and he said, well, I had this great game I think y'all would love playing, and it's really strategic. And he showed the game to the king, and king was like, wow, like this is genius what you came up with. This will help me in the battlefield. It will help me with my strategy, with my finances, everything. So he said, because I'm so impressed, I'm going to give you a seat in the courtroom. So he invited the inventor of chess to be a part of his boardroom for his kingdom. And he said, because you have really done a great job, I want to reward you. So ask whatever you want to ask. And the smart inventor of the chess game, he knew the game he was playing. He said, I want you to give me 1 grain of rice for the first square, 2 grain of rice for the second square, and then double it on each square. And king was like, that's it? That's all you need? So he said, granted, your reward is granted. Now, this guy was smart. He knew his game. He understood. There's something called exponential growth. So if you do an exponential of 2 to the exponential of 64, which are 64 squares in the chess game, you will have enough grain rice to cover the surface of Earth. So why I'm sharing this story is that we as humans, we don't have a cognitive ability to visualize the exponential growth a dollar brings with it when invested correctly. And that is the primary reason people don't invest in real estate or don't buy properties. They think rent is cheaper than buying home. They only look at the short-term gain or loss of, I have to pay my utilities, I have to cut my yard. But they don't look at how home ownership has set people free. So I hope I did a good job at telling the story, but if you want to spice it up, I can come up with the real name of the chess guy and the king and all that good stuff for the detailed people. But yeah, so real quick, any questions? Oh yeah, Varun, compound interest, that's right.
yeah.
Oh, he helped me answer the Uncle Sam. US, United States, was interpreted as Uncle Sam by soldiers when they saw the stamp US on the barrels. Man, a genius. Love it.
Yeah.
Awesome, guys. So any last words in the webinar about investments? Bree, Roger, all you.
I am just really excited for everyone to see the new Excel sheet, and hopefully this was really helpful for everyone to get to understand why we're doing it and how to utilize it. But if anyone has any questions on it or wants to go over it, feel free to give us a shout. We're happy to set something up. You're muted.
Definitely. And I think a lot of y'all listen to this call later on audio, and I get messages from y'all all the time. Just know that this is what you get when you work with us in making those real estate decisions. We're not attached to the fact you buy it or not, but we are very much attached to the fact that you are well aware of what you're saying yes and no to. Okay. All right, guys. Roger, anything from you?
No, I think, we constantly are still making headlines. Texas is a great place to invest. We have a lot of incentives for big companies to move here. And it's exciting to see all the growth. Now, just, it's a bumpy ride, but it's fun at the end. And Brittany's, financial calculator, and her actually taking the time to research these properties. There's no automatic filter to look for these properties, and she's combing through the data. And so when it arrives in your inbox, just spend a few minutes to look at it, and it'll go a long ways, as Rosie's saying. So That's it.
Thank you, guys. Thank you, Bree, for everything. And it has been a blast today. Thank you. Love you all. Bye.
Guys, take care.
Bye,
Bye.
everyone.